This is Justin Pulitzer. This is my weekend review video for Sunday, January 15th, 2017. Good amount of stuff to cover. I'm going to try and plow through it quickly. We're going to start out with the 7 market keys, a couple of the what got us here type of products, indices, commodities, so on and so forth. Get into the major moving averages. I'll talk about some of the momentum stocks and some stocks that I see some big setups in. And then that'll be the end. So let's start out. The VIX here, we've had a major compression of volatility. There are 2 risks that I see here in terms of volatility. One is if you load up tremendously short, you could be in for a extended period of time of low volatility like we've seen before. But if you're short premium, you have the risk of volatility spikes, which of course then would have price and the volatility vega risk going against you. So that would really be a combination of gamma and vega in terms of options terms. If you're just long or short shares, you could kind of ignore that, but the velocity of the move could be increased. So I am very much keenly aware of that and have been mostly playing with either put spreads or call spreads. Not very much in terms of the short premium outside of some, I should say, special situations. It's always the special situations. So we are playing pure directional moves. You can see we're just hovering around below the kind of some reference lows. VIX of course can never go to 0. The lowest I've ever seen in terms of my trading career was a move in 2007 sub $10 back in the day, and that of course led to the financial crisis. So you want to be careful when the VIX gets too low. That being said, there hasn't been much in terms of the 200 MA. It struggled tremendously to stay above it, with a couple of exceptions. And yeah, I am expecting at some point there to be a VIX pop and to get a downtrend line test. But all that said, volatility has been majorly compressing, and I haven't seen anything yet that is going to change that. The dollar. This is a very, very important component to the market, and I think a lot of people overlook it. We've basically had a check back here to the breakout. Remember what I always talk about coming up from the bottom? I had said I was a little suspicious of the breakout just running straight to 109, which is the measured move if you kind of double the range here and you project it upward, 109.32, and then if you do a measured move, that would take you close to 109. Anyhow, that said, let's zoom in here. I'm getting a little better, although not so much today, with the zoom aspect of the charts. So what's my setup here with regard to the dollar? We had a accumulation funnel, a breakout, a look into range that kind of failed, and we're back through it. This bar here to me is important. You can see that's sort of the low end of the pullback before the bounce. You've had now 2 look below into the consolidation funnel and failed with higher lows, and then Friday was just a consolidation day, all this holding the 50 MA. So anything below the 50 MA to me gets a little bit more vulnerable. However, I like this day's range. Anything above 101.77 I like long for a shot back higher. Anything below this 170, you can see this is a very key area here. I would like right or right out short, potentially for a move down to the 100 MA. I would say that this consolidation, this to me was just a liquidation break, but it's been acting a little iffy. We may have a still larger liquidation break, and I think the 100 MA might coincide well with this low here, which was 99.49 if it got there at the time. So this 3-day range, really this 2-day range, but 3-day range, any violation of the high I like long, violation of the low I like right or right out short, and we'll keep it that simple. TLT, I'd been playing this long. I'll talk a little bit about what I was seeing in TLT. This was basically my theory was the Fed day was going to be the low in TLT. I wasn't 100% sure that we weren't going to get a move all the way down to trend, but it's part of me, sometimes I outthink myself. I think it's too easy. I started loading up a little in here. I promptly was stopped out. I got long again and just decided to hold it. We never violated these lows. I would have been out, though. On any break of the Fed day range, I would have been out. And I talked about anything over the Fed day high would be to add to the long. This did work out. It worked out quite well. We got up kind of close to the 50 MA. I had meant to book some profits here, and we had this gap down. And then I had decided to move the stop to below here. Thankfully, it was never challenged, and we got target. I had talked about two targets in the last video. One was the 2009 crash peak, and that wound up being at the end of it. This was 123.14. The high here was 123.15. And I had live tweeted that any move below 123 here was definitely a stop out. And this day closed on the lows, and then you had a gap down, and it was kind of fugly. 50 MA is a key moving average here. We had a bit of a doji. So here's the skinny. Friday's range, I like that. Over the high of day, I like back long. Below the low, I don't either want to be non-participating or right out short for maybe a move down to the 20-day moving average, which is now bending back up. I think that area, if this is like another straight shot, if you don't want to play the short, you could just try right out long on the 20-day moving average. We are starting to make some higher lows and higher highs, so if that coincides with trend, I like it. And I do think at some point we will get the 127s. If it comes down here, I like a simple little call spread. So that's TLT. HYG, for all of you out there hoping for a bear market, this is not going your way. You need to see something like this, a steady selling. This was oil when oil was going down. I think there's been a lot of hedging, and oil has stabilized quite a bit. You have an inverse head and shoulders here. I don't want to go through the trade that I had put on in this. It worked out really well. I currently have no position in this, but I'll say this. As long as you're above this bar's high of day, this 86, 84, the trade is probably still long. Really even to the 50 MA. Any pullback to the 50 MA, look where this kind of broke down from. And where it kind of played around with, it stopped a little bit of a look below and fail here. So I think anything really that holds 50-day and 100 MA is okay in my view. You have a 200 MA, which again here was big support, bending back up. It's above this area. You have now. So what's the trade? Let's get to the skinny. If you want to play right or right out terms, you have 1, 2, 3, 4, 5, 6, 7, 8 days of compression. Anything above the 8-day high, I like long. So that would be above this 87.42. And anything below the low of 87, I like right or right out short for a pullback to one of these moving averages for a quick play. But I don't think that this looks to me really quite dangerous yet. We'll get into that if my view on that changes. Speak of the devil, oil. So what's the deal with oil? So oil is kind of acting a little wild here. You had a big a big move from the top of range to the low of range. A bounce to a lower high, a breakdown, and then it was a false breakdown and a move back up to the upside. And you're in consolidation. So I'll stay consistent. If we get back below 52.11 again, really if you want to even just keep it simple at 52, it's a big range. It's very important. This was a failed head and shoulders within the context of a larger inverse head and shoulders. As long as you're above that head, I'm kind of okay, still long. Below it, gets a little bit more iffy, and maybe we do get a pullback to the 50 or one of the Fibonacci levels. You can see the 50% fib is the 100 MA, and the 200 MA is down at the 61.8. So one of those fibs to me would be an interesting area if there were to be continued weakness. But let's just stick with the 52-ish. That to me, as long as we're above 52s, the path of least resistance remains higher. Below it is either a stop or a right or right out short. XLE, we had the consolidation funnel. We getting better? Yeah, we're doing a little better. We had the 50 MA here, which was this kind of false breakdown. As long as we're kind of on the 50, I'm all right. I'm actually liking this pullback, the multi-days of kind of pullback. I'm going to be looking to maybe try it right or right out on the backside of the old consolidation funnel, because that should be support at least the first go round. If you want, maybe sell some out of the money puts, maybe somewhere I'd have to see what the juice is like, somewhere along the 100 MA or maybe the 200 MA, both of which have been important. See, moves below the 100 MA have not been so sustainable, so maybe if we get to the 100, sell out of the money to the 200. But I am looking to start maybe trying to buy the dip in that soon. A couple of things that are a little bit more concerning. The XOP, this is another one that I kind of follow on occasion. This is kind of the same thing, right? This is basically the range. You had this move down, this big gap up, and you have a 50 MA right at the range low. So if you want to try it right or right out, I'm fine with the 50 MA. But if you start losing 40.21, then this could easily come down to the 100 MA, which has been an important moving average, and maybe get a secondary trend touch, which could coincide with the gap fill. So I'm okay long as the 50 MA holds. If we break up above the downtrend, then it's a clear long. But we are below the 10-day. It's a very iffy area. So any snap of that, I think you can short for the 100 and maybe even play for the full gap fill. But 50 MA there is the key. And anything below the 10-day, I'm very cautious and thinking potentially a little vulnerable. Could be some problems. Exxon, this did what we had discussed. I was a little surprised at the protracted weakness here. This was the Tillerson gap up, and it's since given it back. It's filled a gap, and it's bounced. The bounce hasn't been kind of all that, although I have started now to start selling some out of the money puts. I like selling really below 83 strikes, and would bring it to full size if we do get a full-on trend touch down here near the 84. I guess it's 84 now. If it were to happen Monday, it would be 83s, but could just grind for a while. This bounce hasn't been all that impressive. If we were to get over the 5 day high, no, 4 day high, Monday will be 5 days. If we could get back up over the 50 MA and the 200 MA, then I think the play is back to the upside. It wouldn't surprise me here. I like playing over this range. You can see 87.44. So anything back over that area, to me, I would think could get a downtrend touch, maybe back to 89s. Yeah, that's also kind of the range you could see here. We're just in a big range. This was a bit of a look above range that failed. Maybe it does want to come all the way back down to the lower end of range. I don't know. Right now we're mid-range. So I'm not assuming end range, but if you want to try it right or right out, I'm fine with that. Anything below here, though, I mean, if you're quick, you could play right or right out short, or do put ratios, meaning buy these puts and then selling like 2 times out of the money. I think a lot of people will get very nervous down here, but what they won't notice is that we came down from all the way up here straight to the lower end of the range, and this area to me would be a buy and a put sale. So I'm thinking about that. So the quick play would be short below the lows for a move down to trend, or a move over the 4-day high would be back long. So long story short, that's the skinny with Exxon. Chevron is kind of become the belle of the ball. I think a lot of people are bulled up on Chevron. Look where we stopped, right at this high volume node. So I don't know that the 50 MA would be necessarily support, but it is the end of that distribution. I would probably be more interested in Chevron if there was more of a protracted downtrend to the channel low or the trend line, and it seems like the 100 MA is riding that. So I would probably be into selling some puts there, maybe like the 100 strike or below, maybe something around the Fibonacci levels if we got a trend touch. Let me zoom in a little further. I want to show you something. Look where the trend is here. it coincides right with this breakout, and there's some gaps and some reference areas there. So that's what I'm thinking. The 107.58-ish area, that if it keeps coming down, I like that. And if you want to do some put ratios, meaning buy some puts here and then sell 2 times out of the money here, I like that. Look where the 200 MA might be, the 100 MA. I think that area would be a solid hold. So I'm not really doing anything in Chevron, but waiting opportunistically to buy it lower. FXI, this I really don't know where this is how this is gonna play out, but I did notice something. 100 MA is here, and it also coincides with a down channel touch. So we're maybe getting a little late in the game here. So I think that there could be some room to the 100 MA, and then I like it as a right or right out short for a pullback maybe to the 200 MA. If this breaks out of the 100, just GTFO, meaning get the F out, because this could want to come back up and do a test of the old uptrend area. Everyone will think it's bullish, but look, it'll basically just be a gap fill. So I like it right or right out short against the 100 MA. If we were to break the 50 MA and we not even get to here, then I like it also as a right or right out short. So if it higher, right or right out short on the 100 MA, or break of the 50, I also like it right or right out short. So I am looking for a bit of a pullback, I guess, in FXI for a right or right out trade. If you're a bull on this, just wait for the trend to break, and then you could play it for a move back up to the backside of the channel. So those are kind of 3 setups that I see with regard to FXI. No coinkydink that BABA, look where that's stalling here, the 100 MA. That was it's been a problem for a while. We're getting close to this old gap fill area, which really I should take off. It's not really a gap fill anymore, but it is a referenced high here and kind of the old breakout. I think that area will be a little bit of resistance again. If not, if we could break the 100 MA, I like it right or right out long for a move back higher. If we lose this 1, 2, 3, 4-day low, if you don't even want to wait for this hammer, you could use this low, this 95.55. Any break of that area, like for a right or right out short, maybe for a move down, quickie down to the 10-day MA, a couple of smackarooskies. The 50 MA was really the breakdown point. Maybe we get a 50 MA touch again. At the 50, though, I'd be, again, right or right, looking for the right or right out long. So I like it quick short below these lows for a move down to there, or along above, either along on the 50 or along over the 4-day consolidation range. So again, that's a couple of different trade setups. 100 MA there being very key. IBB, this is just a mess. This got beat up on Trump's tweet about negotiating drug prices. Your race basically right on the 100 MA. Look where this gapped over. So I'm fine if you're long. If you want to play long over the 100 MA, that's fine. Below it, I like short. So 100 MA to me is key, but I don't know how much lower this is going to go. You have a 200, a 50, and a 20 MA confluence down here. I think that's what stopped it. You could see the 200 stopped it here. So I'd really need to see the 200 snap for this to really come down. So 100 MA key and 200. That confluence there is the important. I'm fine playing long against it or short below it. Bristol Myers, this thing, they got smacked up again on the same information really about that drug, the lung cancer drug. This stopped right on the 100 MA, right on the 50 MA below the channel. I'm surprised this went as low as it did. You have 2 consolidation bars and 100 MA right below. I guess I like it long over the 2-day high, or short or a stop if you're long below the 2-day low for maybe a quickie to the 100 MA. I don't know how much this is going to have to the downside because of the 100 MA. There is a gap fill. Let me get rid of this here. 53.16 and the 61.8 is here. So a break of these 2-day lows, maybe there's a full gap fill. But a move over the highs, I think it would start to repair. So yeah, the 2-day range. I like right or right out short below, right or right out long above. Not one I talk about really ever, but this Clovis, I had it as a request. One of my favorite longtime followers requested it. So I don't think I would be necessarily first chasing it here, but if you're already long, the 65 level is 64.16 is the 50% fib. The 65 is sort of this where this old reference is. So yeah, that area I think could be a area to either book profits, or if you want to try a right or right out short for a pullback. Keep in mind, look, this is where the big volume distribution ends, and this is sort of a little bit of one here. So yeah, this is the area that I'd be targeting if you're already long in it. It's also the channel high if you kind of draw these, connect these lows, and then just bring it out from that high. Listen, it's possible this continues on for the gap fill. It's, again, not really one I follow that much. This is a huge void. So, I mean, as long as you're into the gap and above these highs, I mean, I guess the play is long, but I don't know that if I were first buying it here, I'd be willing to stomach a pullback to 40. I'd be down to kind of buy the pullback into there, but if I was already long, I'd be looking to book profits up into there. So that's the skinny with Clovis. Let's get into the S&P. Some important levels to write down in terms of ES. We're still boinging around in that range. I'll show you. We keep having these look above and fails over the Fed day high. This was the Friday close. It didn't quite get there. We did close over the downtrend, but now you can see the Sunday futures opened and we're slightly below. I think the reason this failed, and I warned about this in a tweet, was that, look, we came basically from the range low all the way to the range high nonstop. So it doesn't surprise me there's a pullback. The key level here is still going to be this 2272 half. The Fed day VWAP is 2259.23, and the Fed day low is 2243. So we've just been basically playing range pong. Low end of range, high end of range, back down. You need to see that range snap. Inside of there is the Trump day presser VWAP. I don't know if that's going to mean anything, but I did note it. You can see we basically stopped there on the lows on the pullback in the morning. That's 2264. So until we can clear this 2272 half with confidence, it's just going to be range and iffy. Sorry, but that's just how it is. S&P, let's talk about SPY. I'm the SPY guy. A lot of people think that's kind of funny. I mean, whatever. So we're in a bit of a Listen, we got the channel high. I talked about this being an area to book profits. I said if you want to write or write out short there, but I said I thought it would be very, might be a hard one to make a lot of money on. It did pull back. We got basically down to the 1.272, and now we're back up and just consolidating. You've had a couple of look below and fails of the 20 MA. I don't think another one. See, it held here. Basically held here. Here you have a big look below and fail. I don't think another look below would be met with such, fondness. So I'm fine being long above the 20 MA. Below the 20 MA, I like right or right out short for maybe a pullback to the 50 MA, which, look, is getting close to the channel low. I think a lot of people will be in freak out mode, but look, the 50 MA here was the clear resistance. It should now be the clear support, and I would be, if I was playing short, I'd be covering the 50 MA and reversing the long. That being said, we are a long way from Kansas Toto with regard to the Fibonacci levels. This was the big breakout. It's basically the halfback. So if the 50 were to snap, there is a long way to fall. The retest of the breakout is down in this area, basically, between the 50... you can see that was basically this old gap fill, and the 219.60. So if there's a larger correction in the market, this is the area I'd be targeting, and we'll have to see how that plays out. Anything above these highs, though, like if you were to get back up above this channel and this 1, 2, 3, 4, 5, 6, wait, 1, 2, 3, 4, 5, 6 day consolidation, I think we would see the old all-time high and potentially get the full measured move of the 229, which was kind of this projected. There's an older, basically this high from an older move. On a longer term time frame, this is a bigger 1.618. It is possible we just keep correcting more by time than by price, and then it goes. That's basically what this is doing. Look, we've had these periods of time before where we've kind of consolidated sideways for a while, only to have that larger break kick off the down move. And even this one, look at this, how hard this was to play. Let's say you got short this day, the next day you took a ton of heat. So that's the story. That you really need that kind of bigger break to kick it off. I don't necessarily know that day would be the short, but any bounce into that day, in my view, would be a more interesting short. If you're looking to kind of play the channel, you would kind of be looking to play short below Friday's low for a right or right out play. Let me show you. So let's say Monday is a gap down and it takes out Friday's low. You could play it maybe smaller size and then see how it handles the 20. If the 20 holds, you could cover. If you lose the 20, you could add to it. So that's sort of the right or right out play. So Friday's low, I like maybe right or right out short. And above Friday's high, like right or right out long. To make a long story short, I guess that was a little more long-winded than it needed to be. The expected move this week is $2.25, so $229.90 on the upside, $224.80, which is, remember I've talked about $225 being kind of the new big strike. I don't know that would hold, but that's basically where it would be down to. IWM, the expected move this week is $1, or I don't know where that. I didn't write it down. I think it was like under $2. I talked about 138s, the channel high. I said I didn't know how easy of a short it would be. It's just this was a big look above and fail of channel, I guess. I mean, and now we're kind of just consolidating between the channel high and low. So above Friday's high, I like long. Below the low, I like for a right or right out short. Maybe that would coincide with a move to the 50 MA. This sort of was the range low. You've had a lot of look below and fails here. This one being the biggest. I don't know that I would play, for this whole wick. But if you start getting closes below the 134.81, I think that you could even add to the short. So my initial play would be, like I said, long above the high, which is 136.97, or short below the low, which is 135.65. See how it does in relation to 134.81, and then maybe you could play for the or add to the play for just a move down into the consolidation range. There is we're sort of in like this downward consolidation. Let me make this yellow. I think that would be a little bit more fitting, considering we're not really in a downtrend. You could see that we're in a channel. This is kind of gently pulling back. There is a gap to fill. Maybe it kind of just pongs in that area for a while. It could take a long time. So we'll see. I'm waiting for either a snap of the channel for acceleration lower. Again, all in the context of looking to buy on the channel low, or a break of this for a move still higher. And like I said, on a longer time frame, there's another fib extension up here. So we're consolidating here again, more by time than by price. The Qs, I think a lot of people have been fooled very viciously because they've been bearish. I did a poll on Twitter on the 10th, I believe it was the date. I'm going to try and pull it up quickly. I didn't have this ready right away for the video. I hadn't really planned on even discussing this, but I did a poll, and we had 289 respondents, and I asked which way we would break out of the 5-day consolidation. 43% said higher, 42% said lower. So it's basically a dead heat, and 15% were unsure. So there's really not a lot of euphoria. You're still even below the 50% mark, and I think that the fact that the Nasdaq is starting to rally is, the Nasdaq is at all-time highs. There is one little caveat here. We're getting close to the channel high and the 1.618 Fibonacci extension, so we may hit a little higher and then have a bit of a pullback right as everyone is getting excited. So I think that there is a little bit maybe more room up in the Nasdaq, but it's getting a little I guess, a little bit late, and we're starting to see that in some stocks like Apple. The expected move, by the way, $1.24 this week, so 124.40, close to the 1.618 fib extension high, and 121.92 on the move down. So that would basically just be kind of the end of this range. I don't know if that would hold. If you were to lose the 10-day here, I think that there would be a move down to the lower part of the channel. The aforementioned Apple. So I had been playing long. I had been bullish on this on the breakout and started to unload as we got up into these this gap fill area. And then we had this kind of sudden pullback to the 20 MA, and that held. And now we're back up here. Multi-day consolidation. So I'm fine with pullbacks on channel low, 20 MA, as I'm not necessarily sure we want to chase. There is a lot of kind of confluence of levels up here. I do think that the path of least resistance could be higher for Apple, but there's been a lot of attempts to take it down. It's held in really well. You could see that there's some reference here, and we're spending a lot of time kind of consolidating. 120 is a very big number in terms of the calls, and I think that's been what's been holding back the stock. So I'm fine being long as 117.94 area holds. That's this kind of range low, the multi-day, basically the 10-day. As long as that holds, I'm fine long. Below it, I would be looking either as a stop out or as a short for a move back lower. The ideal scenario, of course, would be a 50 MA test before earnings. That's always my favorite play in Apple, the proverbial shake and bake, right? Look, here you had to move up, a couple of days down, and then the gap. I think their holiday sales are okay, but if Apple keeps rallying into the number, I'm not as confident with the long, because look, we'd have moved up from the bottom to the top, and then it could be a sell the news event and back down. So I would prefer a pullback. Right now, I don't currently have a position in Apple anymore. Amazon has been kind of strong again. We talked about a trade over the 50 MA. That worked out like a peach. I said that I thought 800 would be a little resistance, and I had talked about selling some near-dated synthetic flies, meaning sell 800 calls and buying 820s. That worked out really well. I said the near-date, calendaring it off, selling weeklies, and then buying this longer-dated. A couple of things to be cautious about. One is that we are filling the gap from the breakdown ahead of the number. We are also in a bit of a channel, and the channel high is just a little bit higher, and basically where we kind of topped out the last time. So I'm a little leery. If Amazon does keep rallying, I'd probably be looking to start booking some profits into the gap fill and channel high, which I have. That's what I've been preaching, and I practice what I preach. A couple of things. There's a measured move and Fibonacci extensions if Amazon were to kind of blow away the quarter, which I'm expecting them kind of to do. So I'm not poo-pooing the ability for the stock to move higher. If you take this range and plot a Fibonacci extension, the measured move comes in roughly around the 1.272, which is 884, and the 1.618 is around 931. So, again, the ideal scenario here would be some type of a gap fill here, pull back, shake out all the chasers and what have you, and then it'd come back down lower. If you're currently long, I think you could use 811.40, the low of day here, as a stop. There'd probably be a quick pullback to 800. 100 MA here was kind of pesky. I'd be a buyer or a right or right out. Like if there's a pullback ahead of the earnings, somewhere near the 50 or the 100 MA. If the channel low happened, that would, to me, would be a really great setup. So I am thinking long later, but currently I'm looking at, more in profit-taking mode. Facebook starting to repair. We're above that the breakdown point here. I have a couple of concerns though. One is that we have come up basically from the bottom, and we've again filled the gap ahead of the number. There could be some more move up to the backside of the old uptrend line, which would coincide with these reference highs. And I think that even could potentially set up as a right or right out short. This might even be a double top in Facebook. Friday's range. If there was a gap below the low on Monday, and I'm not saying that there would be, that would be below 127.37. This could be an island reversal, and there could be a shake and bake pullback. My concern with Facebook, and I did talk about a quick long here. It actually has exceeded my move a little bit here. I've been bullish on Facebook for a long time. I still think the company's prospects are good. I just didn't like that they were talking down their future growth numbers. They're talking about ad growth slowing. That's not what you want to hear in a growth stock, and that is what's caused this to be in the wilderness, and there's been a lot of complacency. I often find with the first miss of first quarter, there is the gap fill and there's the move back up because people don't really realize that the story is over, and I'm not saying that it is, but I will tell you this. If this quarter here is a repeat of the first one, this is going to seem, I think, rather gentle compared to the type of move down that we could have in this again. I think it would retest the lows. Like this would be the high. This could easily come down and retest the lows. So as Facebook rallies, if you didn't get out, it's probably a good idea to start booking some profits ahead of the quarter. And then I would rather wait and see how that number goes. Anything above 124.16 is still okay. Back below there is a GTFO and maybe a right or right out short. Netflix is looking pretty bullish, and I've been saying that for a while. This was a bit of a look above and fail. You had a very mild pullback to the 10-day. So let's use Friday's range, which was a close above. That's an acceptance. Anything above the high, 133.93, I think is a long for higher. I am, again, though, a little leery of this thing rallying super hard ahead of the number. I always get nervous with that kind of stuff. And below the low, 130.58 would be a quick right or right out short, because then the whole day would have been a look above and fail. Google. I don't like messing around with this thing when it's not either on the channel low or the channel high. This has a multi-day consolidation here. This is a bit of a doji, a bit of a look above and fail. I think we came from a low, and we're basically getting back to the high, and I think that's where people are looking to book a little bit of profits. We'll have to see how this goes here. Google, I like to kind of do the opposite of. I like the idea of booking some profits here. There could be a move up to this sort of resistance where I think it would be a good right or right out short. So I really don't want to mess around with Google here. If you're long, take the profits. Again, I like playing this either long on channel lows or up on channel highs. There's a ton of chop in here. And I think that there's just easier places to make money, frankly, than Google. My bias, though, longer term is probably more bullish. Tesla is starting to repair itself. Pretty bullish day. Again, I talked about any move over the 200 MA, anything that held I thought was long. We could see the downtrend. That's what this looks like to me. Like it wants to see the downtrend and sort of the midpoint of where this broke down. So short term, I like the idea of booking some profits around the 285, but I do think that this could see the downtrend where I think it would be a right or right out short just because we're coming from the channel, the trend down, the uptrend to the downtrend, and maybe play for a little bit of pullback. If this breaks through, I think it'll see 265 very quickly. The ideal scenario for me here would be for this to come up here, just chop a little while for a while here, and then go. So I do think short term that the path of least resistance is higher in Tesla, but you're probably going to be wanting to look to book some more profits soon. It's moved a lot already. PayPal I like long. This is one of my favorite buy the dip stocks. A couple of things though, caveats. You need to be above this area. We have now multi-day consolidation. This was a bit of a doji, but I do think longer term this goes higher. Any pullback into like the low to mid, or I should say mid to high 30s, I like an area to sell out of the money puts. I've been doing that for a while, and it's worked really well. This was a surprise. They had a pretty good quarter. It pulled back really a lot. Now it's rallying again. Again, chop. I like the idea of selling puts on dips. Longer term, though, I think much higher. Nvidia. This did seem to have had a bit of a peak. We've been making lower highs. You really were in a band. So I think the first test of the 50 MA, which is coming up, I would be an interested buyer. If you could break this sort of cycle of this wedge, then I think the move would be back up to the highs. So I'm either a buyer on a break of the wedge or on a move down to the 50 MA. If you want to play right or right, play put ratios, I'm fine with that. The ideal scenario would be for the there to be a pullback get the 50, because look where it's been so much support. I can't imagine the first test of the 50 not being a buy, and at least for a day trade and then that long. So I either want to buy it over the wedge or on a buy down to the 50 MA. Yeah, that's my story with that. Gap stores not looking particularly spiffy. We've had multiple moves up. This was a gap up that sold. We actually sold here. I talked about booking profits. Look where it was, right to this breakdown level. Came back down violently the next day. I said oddly that it was bound into getting back into levels that I was interested in, and then we had a gap up the next day. So I actually tried taking it long on the pullback intraday to the 200 MA, and it went lower. Then it had an intraday bounce to the 200. I just got out, and then it's been weak. It's sort of tried to rally, and it's been weak. I'll say this. Let's use this day's range as the key. Anything above 24.46, I like long. Below the low, though, 23.16, I like short. I think it would get at least maybe 21s and maybe even down to the 19s. But this may just chop for a while, and I like this day's range as my guide. So that's the story with that. The banks, this is really what I was looking forward to talking to. JP Morgan, there's a lot of really great setups here with regard to JPM. If you draw Fibonacci's, if you use the Jamie Dimon low, or if you use this pullback low, I like the Diamond low, and look where the 61.8 is, right where the breakout was, 66.27. Keep that in mind for a much larger market pullback. That level I don't think is going to be in play for a while, but it could be eventually. Short term, there is a great setup in JPM. Friday they reported. It was a look above range that failed. I actually had an intraday chart here. Can I remove the drawing? I don't know how I'm going to do this. This is very annoying because it's interfering with the chart. But I had a downtrend drawn in. Anyway, Friday's range is the key. It held the 10 and the 20-day MAs, but above 81, a longer term, I think this is going to see like 99, 100. But I don't know that we're not going to get a correction first. So I'll keep it real simple for you boys and girls. Above 88.17 is a long. Below the low of day, which is 86.10, is a short. Keep it simple. Anything inside here is a no touch. There's nothing to discuss. So that's the story. I like playing against Friday's range. I think the same story is going to be in Goldman Sachs. This broke out. Wow, look at this. I can't believe this came up from the bottom. Remember what I talked about with Tesla, first of all? Remember I said get close and then kind of just consolidate a little and then go? That's what this did. Look, this was the downtrend. It got there, it consolidated, and then went. That would be the ideal play in Tesla, by the way. But Friday's range is key. Look, it's right on the 10-day. It was a doji above the high. I think long, the 1.618 is 268, so there could be a little bit more bounce in that ounce. Below the low, I think you could try right or right out short for at the very least a move down to the lower end of the range, close to the 235s, and then reevaluate. I don't know that it would break, but if it does, then we're looking at 50 MA, and look where 50 MA is. Look at this channel. Look where the channel is. The backside of the channel is the 50 MA. So, I mean, this could really be a big runner. I like Friday's range. Again, above the high, I like long. Below the low, I like short. For a move down to here, I'd probably cover half. See how it goes. If it snaps, then I'd re-put the half on and play for the retest of the backside of the consolidation channel. That's the way I'm going to play it. Anyhow, that's my story. I'm sticking to it. I hope you enjoyed the video. Please leave some comments. If you liked the video, hit some thumbs up. Definitely subscribe to my YouTube channel. And we'll see you on Periscope, probably either Wednesday or Thursday. For those of you not aware, Monday is closed in observance of the Martin Luther King Day holiday. A personal hero of mine, Dr. King, was the really a truly historic figure, and I'm glad that the stock exchange is recognizing his greatness and what he's done for the civil rights movement. Anyhow, that's my story. I'm sticking to it. Let's have a great trading week, and cheers.